Personal Finance 101 says you need to keep 6 months of cash in a safety net, right? So that no matter what happens, you've always got that 6 months of cash in a safety net. Well, Betterment kind of takes a totally different approach, one that, quite frankly, I like. And that is, they say, no, you should invest your safety net. Now, historically, Betterment's safety net allocation has been 15% stocks, 85% bonds. But recently, as of the date that this was published on March 2nd, 2021, so almost a year ago, with the inflation that we got going on here, they update. They recommend 30% in stocks and, well, 30 minus 100, 100 minus 30, yeah, 70% in bonds. Took me a minute there, right? So anyways, that's, kind of flies right in the face of the traditional personal finance safety net type of thing. But I really like it because you have to think about this. When your money is in cash, you are getting no return. And as somebody who invests quite a bit of money and keeps most of my money in the market, I have to say that not being invested scares me more than being invested, right? So for people that are just trying to, or just starting to get invested, or just starting to invest, they're always, and maybe you're one of them, they're always afraid that, well, things are going to go down, things aren't going to go good, right? So I better hold in cash, and I don't want to put a lot of money in the market because what if things don't go good? But once you kind of dip your foot in the water and then your leg, once you get in the water, you're like, oh my gosh, I don't want to keep cash at all, right? Like you just want to have all your money invested. And personally, yes, I do have basically all of my money invested. I don't do a safety net in cash. That's why I like Betterment's advice. Right? Because here's the thing, cash is always losing out to inflation, and subsequently, you are not getting any return on the money. So, they've broken things down here and kind of broken out how the risk and return profile is. But in simple words, the reality is that usually most people don't need their safety net fund. And when they do, they don't need it all at one shot. So you might as well keep it invested and get some returns on it. Now, let's just kind of take a look at how this portfolio would have performed here. And I picked Vanguard's 2080 fund, so 20% stocks, and then also 40% stocks. I've got these all wrong here. Let's get that one off of the chart. Okay, I have now got the right funds on the chart here. So this is going back to their inception in 94. The red line is 20% stocks globally, 80% bonds. The blue line is Vanguard's Conservative Growth Fund, which is 40% stocks, 60% bonds, right? So Betterment's allocation would kind of be in the middle of them. But what you can see here, and what I want to point out, is the drawdowns, right? So you do have some drawdowns, but on this fund here of 20% stock, 80% bonds, I think you maybe get about a little like 15% drawdown. Here you may get like a 25% drawdown if you're in 40% stocks. But if you're 30, it's going to be a little less. Like I said, you're going to be somewhere between these two lines. But you see the growth of it over time. Okay, so the majority of years that you have your money in this, it's still growing, right? Now, what if you need it, right? Well, there's a chance you might need it, may have needed it here during the recession. Would you have needed to take it all out at the peak? No, probably not. If you needed to take it out for a reason like a job loss or something, you'd probably be right here. And you wouldn't just withdraw all the money in one shot. You would withdraw a little bit here, then a few months later, right? There's rarely ever a big occurrence where you need all of your personal safety net fund. Now, for the reason of drawdowns and considering that, Betterment recommends that you put a little bit more in it. So I think they recommend putting in 30%. Where is it? So yeah, buffer in here, buffer of 30%. So you put in 30% more than you need. So if your 6-month safety net's 20 grand, you should put in 26 grand in there and keep it invested. But I think that this is more fruitful and provides better returns, much better returns than just saying, okay, my safety net's going to be 20 grand in cash, and I'll put 6 grand into my portfolio. And most people don't do this, right? So most people don't do that. Most people just kind of tend to hoard a little bit more in cash. So, from the fact that you get more returns and you keep more money in the market, I think that this is very good advice. I personally like this advice that Betterment puts out, and it's personally advice that I follow. What do you guys think? Is your safety net invested, or are you going to invest your safety net? Let me know in the comments below.